Hi, welcome back to the channel. This video is part of the monthly portfolio series that I've got going on this channel to update those invested with me about the Etoro portfolio performance, to let you know what's changed in the previous month, and also to share how I perceive the portfolio will fare moving forward. Let's jump right into the performance. The portfolio is up around 7% for the month of December and 39% for the year. This performance definitely could have been a lot higher, but as you may already know if you've been regularly watching this series, I am extremely conservative when it comes to this particular portfolio, since I'm managing money for others and feel responsible to make sure that the probability of losing money is extremely low. That's why you may find me holding anywhere between 20% to maybe 70% of the portfolio in cash at any given time. I would rather sit and get a 0% rate of return rather than a negative 10%, because I'm trying to deliver the best risk-adjusted returns. Currently, I've got 22 individuals invested with me, and I am very happy to say that everyone invested is currently in the green, signifying that everyone invested has had a positive return. Let's go over the portfolio. There are 6 open positions, and almost 55% of the portfolio is currently in cash. Before we get into each of the positions, I'd like to discuss the stocks that were sold off this month. Nordstrom was added to the portfolio back when it was in the $11 to $12 range. I had expected that the stock will recover and reach around $30 to $35 after better than expected Q3 earnings were announced. If you'd like to know more about that position, I've made videos in the past with the title "Is Nordstrom a Good Trade or Investment Opportunity?" and also another video with the title "My Exit Strategy for Nordstrom." Do check those videos out if you haven't already and if you're interested in that particular holding. We were able to exit Nordstrom at an average profit of 118%, although I believe that the last and the largest tranche had an exit return of 151%. The next position that was exited was the SPY ETF, which tracks the performance of the S&P 500 index. The reason for having ETFs in the portfolio is to capture the upside with lower volatility. ETFs tend to have a lower standard deviation relative to individual stocks. Through most of 2020, we've seen a massive discrepancy in returns between large tech, which is represented by the Nasdaq, and small cap value stocks. This is why I chose to put almost 40% of the portfolio into SPY and IWM. SPY did not perform as well as expected, and this is why I decided to sell out of it and keep it in cash. IWM has been performing quite well, and it's still in the portfolio, up around 14% or so. I have been taking partial profits from this particular position and keeping it in cash to hold on for maybe better opportunities in the future. The next holding that I'd like to discuss is Pershing Square Holdings. This is the only closed-end fund in the portfolio. I have made another separate video going in depth as to what opportunity does Pershing Square Holdings represent. In short, we will be receiving the upside from Pershing Square Tontine Holdings through the investment in Pershing Square Holdings with a margin of safety, as PSH currently trades at a discount to NAV. If you are interested in that video, I'll include a link in the description below so you can check it out. Next, we have 2 American stocks and 2 non-American stocks. I'm classifying it that way to make it evident that finding undervalued opportunities in the US is becoming increasingly difficult, and that is what is leading me into buying into companies in Russia and in China. Let's go over the Russian gas giant Gazprom first. Gazprom is an undervalued opportunity that I could see doubling based on fundamentals alone. In the short term, a major catalyst that could dramatically increase the stock price is the announcement of the increase in the payout ratio. Gazprom's management has announced its intention to increase the payout ratio to 50% in line with the other Russian state-owned enterprises. The last time such news was announced, the stock increased 60% within just a few weeks. There are scenarios where I could see Gazprom go above $7, maybe even $10. There is a lot of upside that could come from the Gazprom position, and the price at which we were able to open our position, around $4, is one with a significant margin of safety. The next non-US company in the portfolio is Pinduoduo, one of the largest e-commerce platforms in China. I bought in around the time that a certain financial group started receiving increased scrutiny. It was increasingly evident that the repercussions would ripple across and affect Alibaba. Pinduoduo is the greatest beneficiary in a scenario where regulations start impacting the business activities of Alibaba. This was quite evident on 23rd December when we saw Alibaba stock tank while Pinduoduo had been soaring. Buying into this company was not a discretionary decision. It was driven by certain quantitative metrics that I observe in the market, which led me to buying this particular opportunity. Obviously, I could not have predicted what would happen to Alibaba. However, the numbers were telling me that something was coming and it did make sense to get into Pinduoduo. Let's get to the American stocks in the portfolio. Align Technology is the company behind Invisalign. We are going to see some fantastic numbers from them moving forward as more and more people start getting adjusted to the new normal and decided to get their teeth sorted out. Align will really benefit from news about the effectiveness of the vaccines and also its own strong numbers. I think that's a good portfolio position, and I would only sell out of it if I were to find a better opportunity. The last stock is GameStop. GameStop is interesting because it had crashed after earnings, and I took advantage of the falling price and bought into it once I saw the potential for recovery. The additional GameStop positions were bought from the profits that we made in the sale of the Nordstrom position. With GameStop, the best is still yet to come, and I will be making videos specifically about GameStop to update you about the position in the future. I do hope that my brief explanation of each of the portfolio positions did suffice. If you've got any further questions about the individual positions, or if you just got questions for me, please do leave them in the comments below, or feel free to even reach out to me on Instagram. I'll leave the handle bottom here. So do let me know how your portfolio has performed over 2022, and if there are any potential opportunities that you see on your radar. So that covers the portfolio review. Hope you have a fantastic year ahead. Happy New Year to everyone, and thank you for watching.